Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about GVK Power and whether this stock has already run up so much and has gone down to 3 rupees, whether it is a very good buy at around 3.5 or 4 rupees or not, and whether you should avoid it. So let's understand this. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the company, GVK Power was established in 1992 and they provide major infrastructure and power service solution for companies across India. They have set up their businesses across all over India and some parts of the Middle East and Australia as well. They have constructed major airports in India. Primarily of them has been the Bombay airport that established in Mumbai. They have completed projects of more than 20,000 crore, and there are many projects that are running at the moment, but they have been marred by the infrastructure downturn that has taken place over the years. If we look at the financials of GVK Power, the sales have gone down by around, you would say, 11 to 12%, not 37%, but around 12%. Whereas the profit, well, they had a loss of 117 crore in the last year of the same quarter, and they have even bigger loss at this point of time in the September quarter. If you look at it, they had a loss of 165 crores versus 117 crores. High debt has really hurt the company big time, and there are no return ratios to talk home about because of the factor that they are producing losses after losses in all the quarters that they have been doing business over the last 6 to 7 years. If we look at the stock performance, the stock has underperformed over the last 5 to 7 years. It has gone down from levels of 17-16 rupees to now less than 4 rupees. Numbers have improved slightly. In fact, in early part of FY19, numbers started to look really good, with the company coming back into profitability. But what we have noticed is the losses have again increased over the last couple of quarters, with the company coming back into the negative, and with 117 odd crores of loss, 165 crores of loss in one quarter. This is extremely detrimental for an infrastructure company. But again, the problem has remained debt. With a high level of debt and loans that GVK Power has, they would have to end up selling major stake in their best businesses in order to curtail the debt, and that is where people are staying away from investing in such a company in which the company is trying to liquidate their own assets in order to continue the business. Although the airport infrastructure has picked up over the years, and we have seen that how airline traffic has increased over the last 2 to 3 years, but then again company needs to get out of the current debt position in order to do well over the next few years. So what went wrong with GVK Power? They took major debts or loans during the 2007 peak. So we had the infrastructure boom here in India between 2003 to 2007, and when the crisis happened in the United States with respect to the financial crisis that took place, and that took away even major banks there like Lehman Brothers, we have seen what happened with the India infrastructure companies. The infra boom came to a stall, and over the last 12 years we have seen that there have been talks of a infrastructure turnaround, the economy turning around, and the private capex picking up, but whatever has happened on the ground is extremely contrary to what we had expected, and there have been no pickup of the private capex. And in that regard, the company, that's GVK Power, has not been able to repay the loans post the 2009 meltdown, and they had to sell major assets, as I mentioned, and they have reduced enormous burden till 2018. But we have seen that the debt has, although it has reduced, but it is at, even at these levels, are at elevated levels at the moment. So it would take a while for this to recover, maybe another 2 to 3 years for the company to recover from the kind of position that it is into. So what needs to be done? In my opinion, you have to avoid the company for the time being. At 4 rupees, you might think that the company is coming at very cheap levels, but again, you need to understand, and I have put up many videos with regard to valuations of any company, and you need to understand as to how good a valuation is. So an Eicher Motors trading at around 25,000 rupees might be more, you could say, cheaper than a GVK Power trading at 4 rupees, purely because Aisha Motors would be producing a very good EPS numbers. They are having very good profitability with respect to the Royal Enfield product that they are selling across India. And hence, don't look at the nominal pricing of a product or a stock. Look at the value of a stock in terms of what the company is doing in terms of producing the EPS, the earning per share, as well as the profitability quarter on quarter. As the major assets have been sold off for GVK Power, it remains to be seen how the company will continue as a going concern over the next few years, because if they don't have any assets to work with, how would the business continue? And that is the major thing about what the investors are thinking about when they are looking at investing into a company like JVK, even if the company is coming at only 3 rupees 80 paise. So you need to look for low debt companies, look for companies which are even into infrastructure but still have very low debt, and they are into businesses in which they get government orders. There are many companies in that regard. I have put up a video on NBCC which really highlights the point as to how that company is getting government orders whenever they are getting, and they are doing well in that business, compared to something like a GVK or a GMR Infra. So, and there are other companies as well. There are property companies as well as real estate companies which have very good balance sheets that you can look at. Remember that the future belongs to the leaders, and the survivors of this meltdown in the infrastructure and capital goods cycle would be the ones with the higher level of, you could say, safety with regard to their balance sheet. So the leaders of this pack need to be bought rather than companies with lower, you could say, per se price, or what the price that you see on the screen. So you could even avoid the sector as a whole. I believe that buying into consumption or consumption ancillary companies is much better than buying into infrastructure or capital goods, because you are able to understand the business better. So buying a Britannia or a Nestle would be much better than buying something like a Larsen and Toubro, because you understand as to how many biscuits that a company would sell, or how many products of milk food would a company sell, compared to getting a business and then the whole cycle of getting the money into the account. There's a lot of gestation period with regard to an infrastructure company compared to a consumer company or an FMCG company. So this was my video on GVK Power. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.